Hey everybody, Smart Silver Stacker here. Today is Monday, December 26, 2022, and I hope that everybody watching had a great Christmas holiday. Hope you had a chance to spend some time with some family and some loved ones and reflect on the important things in life, and also hope you had a chance to enjoy some of the economic abundance that we still have here in the West, although it does seem to be fading fast. We've still got it pretty good here compared to many places in the world. And today, markets are closed in observance of the Christmas holiday, but we have plenty to talk about. We've got grid failures across the country. We've got power substation attacks. We have got countries around the world, emerging markets, defaulting on their debt. We've got huge government spending. We've got an oil embargo set to go into effect in February. We're going to talk about that a little bit. Plenty to cover today, that and more. But before we really get into today's video, I do want to say a big thank you to our video sponsor today, silverbotanicals.com. Those are personal hygiene and household products powered by Nano Silver. Check them out with the link down in the description. And don't forget to use coupon code STACKER to save 10% off your order. So we had grid failures across the country, record cold weather descending across much of the U.S. over the Christmas holiday here. It was the coldest Christmas in decades. And as a result of these record low temperatures, millions of individuals were left powerless as the grid simply could not keep up with the demand for all of the heating amidst these extremely cold temperatures. And it wasn't just Mother Nature that was putting the grid under strain. We also had 4 power substations in Washington reported vandalized and attacked, leaving more than 10,000 people without power. And this is part of a somewhat disturbing trend that we've been experiencing in the country lately. We had those attacks in Carolina. 2 power substations, I believe, were attacked with gunfire not too long ago. And then there were some attacks in the Pacific Northwest following that. And then these most recent 4 deliberate attacks on substations in Washington over the holiday. And all of this, the deliberate power attacks, it doesn't seem like we have any idea really who's behind this. I've heard all sorts of theories floated out there that whether it be sleeper cells or domestic extremists or perhaps even a false flag by our own powers that be. But regardless, it shows us how vulnerable the grid is. And the same thing with Mother Nature. The grid is under assault from multiple fronts, it seems. And it's something that I think we take for granted, the grid that is. But it is not that. It's certainly a vulnerable aspect of our infrastructure, and it's one that really provides the lion's share of the benefits of living in the times that we do, the technologically advanced times. Because without power, you lose a lot of things, heating and cooling, obviously, but much more than that. You lose connectivity, you lose access to the electronic financial system, and as stackers, that's something that really rings true for us, I think, in the event of a complete grid failure. Not these rolling blackouts that we're seeing now, but let's say some of these attacks become a little more sophisticated and they're successful. Well, what kind of assets do you really want to have? Do you want to have electronic dollars in a bank account somewhere with ATMs that aren't functioning? Or do you want to have, physical gold and physical silver bullion assets with no counterparty risk? Or maybe you want to have Bitcoin. How does Bitcoin fare in a grid failure? It seems like cryptocurrencies are probably not a great choice in the event of a grid failure, but if you have a differing opinion, leave me a comment down below. And of course, cash too. Cash probably one of the most important things to have in the event of a grid failure, because gold and silver, these are long-term savings, but at least in a short-term grid down failure, I think that cash is probably going to be the asset of choice. But for the longer term, if the grid were to stay down for a prolonged period of time, that's when I think you would really benefit disproportionately by having something like a gold back, or gold coins, what have you. But gold back's kind of perfect for transactional precious metals, I would say. And then also, of course, you get your silver bars, your silver rounds, your silver coins, perhaps the more recognizable form of bullion. But leave me a comment down below. What do you think the best asset to have is for grid failure? Now, I know a lot of people are going to tell me, well, a generator and food and ammunition and that sort of thing. And obviously, yes, in a grid down situation, those are all things that you will want to have. But I'm talking more about financial assets, gold, silver, cash, Bitcoin. What do you think the best financial asset to have in a grid down scenario might be, regardless of whether that's from a natural disaster or man-made physical attacks or even perhaps a cyber attack? That's something that also the grid is very vulnerable to. And of course, the grid down does leave a lot of security concerns as well. One of the things that is being reported is that amongst a blizzard in Buffalo, there is considerable looting with the local media. They're kind of downplaying it, but on social media, there are a number of videos being shared of buildings and businesses that have been looted, smashed windows, missing merchandise, folks rummaging through the store inventories, it looks like. And you know what they say, you're 9 meals away from anarchy, and it looks like in Buffalo, you're one blizzard away from anarchy, or somewhere thereabouts. So just goes to show that, again, gold and silver are not the only thing you need to be prepping with. You also need to have some way to protect yourself in the event that you have looting and anarchy in your neck of the woods. Now, moving away from what's going on here in the US, we've also got some news out of Ghana that they are defaulting on some of their debts and they're being placed into the status of selective default. Now, I reported recently about Ghana's gold for oil barter plan. According to their vice president, they will be receiving the first deliveries of oil and petroleum products purchased under the gold for oil barter arrangement in January. But at the same time here, they are defaulting on some of their debts, it looks like. Now, emerging market countries have been some of the hardest hit here in 2022 with the appreciation of the dollar. It has made dollar-denominated debts very difficult for emerging market economies and governments to service those dollar-denominated debts as their local currencies have been depreciating. A lot of these emerging market economies are probably going to be tired of being at the whim of the United States Central Bank, the Federal Reserve, in terms of U.S. monetary policy affecting their local economies so much. And a lot of that has to do with their dependence on the US dollar. Trading in the US dollar, goods being priced in the US dollar, their debt that happens to be denominated in US dollars, all of this becomes a big problem for them as the Fed twiddles around with interest rates and affects the values of their local currencies. So I think that this trend of Ghana defaulting on debt and moving to a gold for oil kind of barter arrangement with so far undisclosed party, this is going to become more the norm, and we are going to see the dollar come under more pressure, and we are going to see more de-dollarization as more of these emerging market nations decide that they don't want to be subject to the whim of the Federal Reserve anymore. And so that is certainly an interesting story and one that's very pertinent as we move ahead here into 2023. And something else that we have set to go into effect in early 2023 here is the second part of the European embargo on Russian oil. So on February 5th, the final phase of that embargo is going to go into effect. Right now, the embargo extends to Russian crude oil exports, but in February, there will be an embargo on refined petroleum products going into effect. So think, diesel fuel, gasoline, heating oil, that sort of thing. And that is going to be very difficult for Europe, a Europe that is already experiencing significant inflation and shortages of energy and skyrocketing energy prices. It's going to be pinched even more as their options for energy sources will be diminishing even further. And I think this is sort of giving us a preview of what we have to come in 2023, this grid failure that we've had in the U.S., skyrocketing energy prices in parts of the country, skyrocketing energy prices in Europe, and really just throughout the West, a general insecurity when it comes to energy. I believe that that is going to be a trend that we see exacerbated as we move along here into 2023. Now, what else might we see continue in 2023? Well, I think spending is probably going to continue here in the U.S. to absolutely skyrocket. We just got the $1.7 trillion omnibus bill passed and sent off to the president for his signature. And that includes one of the largest defense budgets annually ever, $858 billion, much of that geared towards preparing us for further conflict in Eastern Europe. And, the U.S. really has its hands full in terms of things we're trying to keep a lid on geopolitic-wise. I mean, we need forces in Eastern Europe. That's obviously probably the thing taking priority, but also, in the Pacific. So we've got multiple theaters that we need to be prepared to intervene in with the way that we've structured this military and this empire, and that is becoming very costly. And then also domestic expenses also through the roof. So I suspect that in 2023, we are going to see the current 1.2 some odd trillion dollar deficit explode, probably up to about $2 trillion. And I would not be surprised if by the end of 2023 we see a national debt of $34 trillion or higher. Today's debt is high, but it can certainly go a lot higher, and I think we are going to see that. Now, as far as the conflict in Eastern Europe, an update on that is that Vladimir Putin has essentially said that he believes peace is impossible following Zelensky's visit to Washington. Russia stating that they are willing to consider peace talks, but it's very unlikely that anything that they would propose would be acceptable to the Ukrainians. Any kind of territorial concessions on the part of Ukraine are not on the table at all as far as they're concerned, and so we are not going to see this come to a peaceful resolution anytime soon. And also, recent report of a drone attack on a Russian airbase deep within Russian territory, killing 3 Russian servicemen. So further escalations here as Ukraine continues to launch attacks into Russian territory. Now, I mean, they're getting invaded, so who can really fault them for that? But at the same time, the conflict is ratcheting up, and that's something that we as Americans should be very concerned about, because it seems that we have taken it upon our shoulders to fund and finance and dispense with this war as our leaders see fit, despite the fact that, I don't know about you, but, I don't really feel like I have much of a dog in the fight in Ukraine. That's just my feelings. I feel like we should perhaps abide by the admonitions of the founding fathers, such as George Washington, who warned us to stay out of European affairs, but maybe that's a topic for another video. China also, they have some interesting developments going on here as we enter into 2023. They are reopening their economy. They're seeing a spike in the COVID cases, but of course, once that runs through the majority of their population, they will probably achieve herd immunity, and it will become kind of an obnoxious background disease rather than, a really threatening pandemic, and it looks like that is the path they are on. Also, they are continuing to ratchet up the situation there in Taiwan, with reports from Taiwan that China has sent 71 warplanes and 7 ships into their territory. So it doesn't look like they are ratcheting down that conflict at all, quite the opposite. So that may be a portent of what we have to look forward to in 2023 as well. Now back to the domestic economy here regarding spending. There was a poll conducted by Newsweek recently. I thought this was interesting, that 63% of Americans are, get this, in favor of stimulus checks to fight inflation. Now, it's not shocking to me that the majority of voters in the U.S. would be in favor of receiving more free government handouts. I mean, it's kind of one of the critical flaws of a democracy, when voters realize that they can vote themselves money. But this idea that somehow stimulus checks will fight inflation, I mean, I suppose that in the extremely short term, if you are finding yourself tapped out because of rising prices, yes, getting a handout of cash would be helpful. But ultimately, the inflation problem, of course, will be made much worse by any more stimulus, because you do 2 things when you give the citizenry stimulus checks. One is you disincentivize them to work, because the main incentive to work, of course, is that you need money. So if you're getting money for free from the government, why work? So you no longer are producing goods and services and putting them into the economy, but at the same time, you are encouraging those same folks to go out and bid up the price of whatever goods and services remain. So it's really a 2-pronged assault on the purchasing power of the dollar when you hand out stimulus checks that are financed by the printing press, that is. But of course, that is how any further stimulus that we get will be financed, because the government is broke. Now, it does make me wonder if those 63% in favor of those stimulus checks in those Newsweek poll were the same 63% of Americans that CNBC has been reporting are living paycheck to paycheck at the moment. It's interesting that those numbers are the same. So we're wrapping up the year here. 2022 has certainly been a challenging year for many people. I mean, it has been a year of tremendous change, that's for sure. Just think about what we were looking at in Christmas of 2021. There was no war in Ukraine. There was no weaponization of the dollar, at least not nearly to the degree that we have seen so far. We didn't have widespread food shortages and breaking down global supply chains. And so, 2022 has been a tough year, but 2023, it's looking like is going to be shaping up to be just as difficult, if not more so. And I suspect that the resolve of many around the world and in this nation as well are going to be tested in ways that they have not been tested in some time. And so to sum it up, we're going to see more spending, more borrowing money from the future and spending it into the now. That's going to lead to higher inflation. That is pretty much guaranteed and baked into the cake with the way we see things unfolding here, regardless of what the Fed does with interest rates. We're going to see a further breakdown in global relations and global supply chains. That also seems pretty much guaranteed at this point. It doesn't seem like there is any sign of us reaching an amicable end to these conflicts that are underway or are brewing around the world. And also, we're going to see a further degeneration here in the US of our real economy. This is reflected in falling real wages, record credit card debt, individuals who are living paycheck to paycheck. All of these metrics of how the real economy is doing for the average person here in the US are going to continue to decline. And that means, unfortunately, more social unrest, more crime, more general unrest here in the US as people find it harder and harder to afford and to meet their basic needs. And also, I believe we are going to be seeing higher gold, silver, oil, energy prices, and also higher valuations for arms manufacturers. That kind of stock is probably going to do well, and I believe the rest of the markets probably going to be suffering considerably. Consumer staples will do okay, commodities will do okay, but any other investments, I believe, are probably going to be suffering throughout 2023. That's why I'm still stacking. Of course, none of this is financial advice. It's just me just sharing my thoughts and my observations with what's going on in the world at the moment. I do want to say a big thank you to all of you for watching. I'm sure I'll talk to you again before the new year is here, but I do appreciate each and every one of you. Leave me a comment down below to let me know what you think about all these developments I covered in today's video, and I will catch you next time. Smart Silver Stacker, out.